Welcome back to EDS, and in this video I'm going to share with you the secret behind winning trades when it comes to writing options contracts and collecting premium. So what we're going to do is have a look inside of our real life portfolio. It's a small account, very small account, and we're just going to show you how to manage the positions and what the differences between becoming a profitable trader from a non-profitable trader. So this is a position that we've got open already, MVO. Before we do a deep dive on MVO, let's just have a look at the overall portfolio. So we've got 1, 2, 3, 4, 5, 6 positions on. And as we can see here, we're nice and diverse. We've got a position on an NVO, gold, Palantir, the Euro futures, Canadian dollar futures, and Tesla. So nice and diverse portfolio. We've got between 33 and 55 days left on these contracts. Nice and high IV ranks, as we can see here. We're playing the contraction, and we've already closed out one position in profit. That was the British pound futures, I believe. Off the top of my head, we closed that out earlier on in the week. So there was 6 positions. We closed one out in profit at 50% of max profit. We've currently got 2 positions that are in a slight drawdown, but we've got 4 positions that are nice and green. And we're just going to do a bit of a deep dive on these positions and show you what it looks like to manage these positions. And um, hopefully, you'll be able to see the psychology behind winning trades and what it takes to be able to hold these positions and make money over the long term. So, all of these positions are iron condors. They are all covered positions. None of them are naked positions. As you can see, there's 4 legs on each position here. So let's just start off with NVO. So with NVO, we're 25% of the way to max profit. We've still got a very nice and high IV rank. We've been in this position for 18 days, 33 days left on the contract. And this is what that position looks like. These blue lines here show you where our short strikes are, and then our longs are slightly further out, $5 wide from there, covering our shorts. But our shorts are where all the risk is at. So that's why we've only marked out the short contracts on this graph. So for anyone that's watched some of our videos before, you'll know that as long as price stays within this range that we've created for ourselves with the short strikes, we'll be absolutely fine. And we'll make money. We'll keep the premium that we collected up front when the order got filled. So, in this case, all we need to do is nothing. That's the big secret for MVO. We do nothing. You need to be patient, let theta decay the value on the contract. As we can see, price is at 106.95, basically 107, and it's practically smack bang in the middle of our 2 strikes here. There is nothing to do. If you start making adjustments in this situation, it won't end well. Most likely, it won't end well. If you start messing about with things, it will affect your profitability. Now, the big secret here is do nothing. We've defined our risk at the beginning when we submitted the order and the order got filled. We don't need to do anything here. We just need to hold and see what happens over the coming week. Next position, GLD. As you can see, we are currently 14.8, basically 15% of the way to max profit. We've got a nice IV rank, still slightly elevated at 56.7. We've been in this position for 10 days. We've got 33 days left on the contract. This is what GLD looks like right now. Again, very similar situation to NVO. We've got our short strikes here marked in blue, and price is currently at basically just under 245, which is basically smack bang in the middle of the range again. And I hope you're noticing the pattern here, but the big secret is we need to do nothing. If we start messing about with things, it will go against us. So, and I don't mean the price will move against us, I mean the position will move against us. Remember, we are trading the options contracts, which is based on the underlying. It is not the underlying itself. It is a derivative of the underlying. It's a second layer on top of the underlying. So our P&L is not necessarily based on the price movements of GLD, but it's based on the Greeks, um, that go into calculating the value of the contract. So GLD, nothing to do there. Palantir next. We're basically at break even on Palantir. We're up slightly with 2.2% profit. Still got an elevated IV rank. This is a much newer position. We've only been in this position for 3 days. Again, 33 days left on this contract. And again, let's have a look at Palantir. So for Palantir, we've not actually marked it on the graph. Let's mark it on the graph real quick. So 65 and 85. That's where our short strikes are, 65 and 85. There we go. So as you can see, this is our range over here. Again, price is perfectly in the middle of the range. The psychology behind winning trades when you are selling premium is to do nothing. Once you have got your order filled, once you've collected the premium, especially if it's a covered position like this, i.e. an iron condor, it's not naked. The naked version of this would be a strangle. It is a covered position. The risk is defined. We've managed our risk. We need to do nothing. And if this was a naked position, again, we would do nothing because our strikes haven't been breached. And most of the time, our strikes will not be breached. We know that upon entry. As we can see here, IVR is still elevated. We're hoping to get a contraction in IV, which will boost our profits quite nicely. And hopefully, we'll find an opportunity to exit. So again, the big secret for Palantir is we need to do nothing. So now we move on to some futures positions. So we've got the Euro futures, which is currently basically at break even, just under 1% of the way to max profit. Again, 54%, an IV rank of 54, sorry. We've been in this position for 10 days and we've got 55 days left on this contract. So let's have a look at the chart for the Euro futures. And as we can see here, we've got our strikes marked out. Futures is slightly different. Futures is based on span margin, which makes futures far more capital efficient. So it's very, very good for growing small accounts, even large accounts. You can typically get a very nice and high return on capital based on the buying power that's required up front. But again, for the Euro futures, we are smack bang in the middle of our two strikes. We are in the middle of our range. Again, there is absolutely nothing to do here. The pattern is emerging at this point. The psychology behind winning trades and the secret behind winning trades is to do nothing once your order has been filled. Give the position time to breathe and let it work. Let Vega contract, let Theta decay the value of the contract over time. Let's move on now to the Canadian dollar futures. We're in a very small loss here of negative 14%. We've got a very high IV rank of 93.2, and we've been in this position for 16 days, 55 days left on the contract. And as we can see here, price is slightly on the lower side in terms of it's closer to our put contract as opposed to our call contract. It's not so much in the middle. However, our strikes have not been breached, and therefore we still need to do absolutely nothing. There's nothing to do on this position. The only time we would ever do anything is if our strikes are breached. And because we've defined our risk on entry, this is a covered position. So if you have a look here, we've got our short put at 0.7. Okay. Let's just expand the positions. We've got a short put at 0.7, and then we've got a long put covering our short put at 0.695. Okay, we're covering our short. The short is not naked, which means our risk is defined. Which means that even if price breaks or blows through our short strike, we still wouldn't do anything because price can still come back within our range. And as long as price is within our range at expiration, we're absolutely fine. We're going to make money. And even if price does breach our breach our short strike, as long as it doesn't breach it by too much, we'll still make money because our break evens are wider than where our strikes are. Our break evens are calculated by whatever the strike is, plus or minus the premium that we collect, depending on whether it's a put or a call. So the odds are very much in our favor. We defined our odds. We set everything in motion when the order got filled. So we just need to be patient and let everything play out. Now, if price really blew through our short strike, we could simply just roll the untested side towards the market, follow the market a little bit, rebalance our deltas. But that's not necessary in a defined position like this, because price can always move back within our range. The probability of price touching our strike is higher than the probability of price staying outside of this range at expiration. It's not uncommon for price to touch our strike and then come back. So again, there is absolutely nothing to do here. We just need to let the Greeks do what the Greeks do. This is a very hands-off approach to trading. We don't trade based off of the charts, but we can look at the charts to give us an idea of what's happening and where we stand. Generally speaking, you would ideally just look at delta, but if you're more of a visual person, you can just look at the chart. So finally, we've got Tesla. Now, Tesla being Tesla, I'm not surprised why we're in a small loss here of 31%. We were in a small profit of about 30-40% earlier in the week. But because Tesla does what Tesla does, we're back in a small loss. But then again, we collected a nice amount of premium upfront to take on the additional risk and the additional volatility of Tesla. So let's just have a look at Tesla. This is what our position looks like currently with Tesla. We've got our short strike at 345 and we've got our short call at 485. Price is pretty much smack bang in the middle of the range. We've got a IV rank of 77.1, so it's still nice and high. We've only been in this position for 6 days. We've got 33 days left on the contract, so plenty of time left to go. And price seems to be moving towards our call contract, hence why our position is slightly in the red. Now, as data decays, the value of the contract, we will slowly start to move into the green from the red. And as you can see, this is the breakdown of each leg. We've got our long put, short call, long call. And as you can see here, we are in a loss on our short call, and we're in a profit on our long call. And this is why a covered position works. This is why our risk is defined, because as one leg loses money, the other leg will make money, and the difference is we're basically playing the spread. We're not playing each individual leg, we're playing the spread in between the two contracts. Which is great for smaller accounts and building smaller accounts. It also means that we don't have to worry about things like margin expansion, which is a little bit outside the scope of this video, but there you go. That's Tesla, and you know the same thing applies here. We just need to do nothing. The secret behind winning trades here is to do nothing. If you get jittery, if you get anxious, and you feel nervous, and you're seeing a bit of red in your portfolio, and you start making adjustments to collect more premium, over the long run, it will work against you. The only exception to that is if it's a naked position, but even then, you really need to know what you're doing. You don't just want to be making adjustments because you're panicking, right? Remember, we're controlling our size on entry. We know what our probabilities of success are, and we're happy with everything on entry. Any adjustments that we make is a bonus, right, to boost our returns and minimize losses. As you can see here with Tesla, we've had a nice little jump up in IV. Hopefully, we can see a bit of a contraction. And we should get a nice opportunity to take some profit off the table. Now, speaking of controlling position sizing, how do you know how much buying power you should be allocating to your positions? Well, we've created a free position sizing template. Link is in the description. Just click on this button here, free position sizing template, and it will bring you to this spreadsheet. The way it works is you enter in the size of your portfolio. Let's just say you've got $10,000, and then below that you're entering what the current VIX level is. Say if it's 13.1, Everything below will then be automatically calculated for you. And at this point, all you need to do is use this information to form the backbone of your portfolio. And over the long term, you'll be absolutely fine. It will tell you the maximum amount of buying power you should be allocating to any single defined risk position, undefined risk position, and how much of your portfolio you should be allocating to short premium strategies in general. As long as you follow this over the long term, you will be absolutely fine. And there is also an explanation here of a little bit of how things work and why. Now, if you want to learn in more detail and see what we're doing behind the scenes, link in the description. This time, click on EDS Premium. Get yourself signed up. Inside, you will have access to our portfolios that will allow you to see the positions that we're placing, how we're managing risk, the adjustments that we're making, all in real time. And there's also a full course, so no prior knowledge is required. We will teach you everything that you need to know from start to finish. The combination of these two things allows you to learn the theory and then see how it's applied in real life. You can use our positions as inspiration, or you can simply copy us. There's a private community. Well, it is a private community. So if you get stuck, you can speak with myself directly or with other like minded individuals. There's also a 100% money back guarantee. So once you have studied our full course and followed our trades for at least 6 months, if at that point you haven't been profitable, then we will work with you for free until you are, or you can simply request a full refund. So it's 100% risk free for you. And right now it's super cheap, £1 a month. We've just started. The price will be increasing once we've got a couple more members in. However, once you're in, the price is locked in for you for life. You don't have to worry about price increases. So you are definitely rewarded for getting in early. And the aim of EDS Premium is to get you completely self-sufficient within 6 to 12 months, to get you to a point where you can sell premium without any external help. And it's a skill that you could take with you for the rest of your life, and no one can take it away from you. Of course, you are always welcome to stay and be a part of the community. However, we're not trying to lock you in for life. 6 to 12 months and you should be good to go. So with that being said, I will see you guys on the inside.